For hedge fund investors, the stock market is like their casino, but instead of the house always winning, it's the players who have the edge. Every investment a hedge fund investor makes is a bet like one at a blackjack table, but these investors only make bets they have super high conviction in, like doubling down on an 11 to get 21 against the dealer's 6 who's likely to bust. The best hedge fund investors place bets with huge payouts and little downside risk, but that doesn't mean that the job is easy or that you're guaranteed instant riches. Working at a hedge fund is a challenging grind that requires a lot of skill, passion, and curiosity. And so my goal today is to show you the ups and downs of what a realistic week in the life of a hedge fund investor looks like. So buckle up because there's going to be a ton of volatility. Now, before getting started, if like me, you're fascinated by the world of investing, you may want to check out the Applied Value Investing Certificate program being offered by Wall Street Prep and Wharton. This program teaches you how to apply the principles of value investing with the sophistication of an institutional investor, and is taught by Wharton professors and keynote speakers from real investors, including Oaktree's founder Howard Marks, who is one of the most famous investors in the world. Throughout this 8-week-long program, you'll learn about the core concepts behind value investing, such as market efficiency, intrinsic value, process-driven value investing, and a whole lot more. And you'll also gain access to an exclusive global network with access to special in-person networking events. And so whether you're an individual investor or a student trying to break into hedge funds, this program will give you the fundamental knowledge you need to invest, like the father of value investing himself, Warren Buffett. And if any of this is of interest to you, be sure to use my code rareliquid to get up to $500 off. I'll leave information about everything I discussed in this video's description. All right, with that said, let's head into our week, starting with Monday morning, where my alarm goes off at 6:30 a.m. And after getting ready and a quick breakfast, by 7:30, I'm at my desk scanning the news. Macro awareness is really key in this job, so I start by checking global markets, major headlines, and industry-specific news to see if there's anything that might be impacting my portfolio. We then kick off the week with a team meeting at 8 a.m. Our portfolio manager, or PM, and all the analysts gather together to discuss the game plan for the week. Unlike in banking, where I hardly ever spoke as an analyst, at a hedge fund, I need to constantly voice my opinion, and so I update the team on any critical news for our positions, like a new product announcement or a CEO change. After the meeting from 9 to 10, I get organized. Mondays are often about setting the table for the week and reviewing how our portfolio did last week and prioritizing what to tackle next. And so today, my task is to explore a new investment idea that my PM assigned me. And so from 10 to 2, I'm deep in research mode, looking into a new medical device company that we're thinking about investing in. And so I spend a few hours reading company-related materials such as 10Ks, equity research reports, investor presentations, earnings transcripts, medical journals, and FDA filings. From 2 to 5, I'll put together a high-level quarterly operating model for the company and use the findings from my research to compare what I think the company's revenue and earnings will be for the next upcoming quarter versus what Wall Street currently expects them to be. I then meet with my PM for 30 minutes and give him my thoughts on how I think the street isn't fully taking into account the impact of tariffs, which will materially affect earnings, and tentatively recommend that we short the company. He likes what he hears and tells me he'll give it some thought, and that I should also look into another medtech company to simultaneously buy so we can hedge our position. And so from 5:30 to 9, I start doing research on a long position. I have a handful of names in mind and create a quick comps table and pull equity research reports to get a refresher on the latest news for each company. I write down some notes with some key bull and bear points, any red flags, and further areas of diligence. And then I shoot a quick email to an industry expert who was a former medtech exec to see if they're available for a call this week. And then I head home. On Tuesday, I get in again by 7:30 a.m. and my PM has sent me an email with additional things to look into for my short position idea. And so for the next few hours, I spend time digging further into the impact of tariffs in the medtech industry. I also send another email to an expert who has previously worked for the US Department of Commerce and set up a call for tomorrow to learn from his perspective. I then spend time reading over sell-side notes and government publications to better understand how the new tariffs are structured and which product categories are most affected, and cross-reference this with the company's segment disclosures to estimate how much of their revenue is actually at risk. Then after a quick lunch, at 12:30, I hop on the phone with the industry expert I contacted yesterday to get a sense of how competitors are reacting to tariffs and whether there's been any supplier pushback or workaround strategies. He confirms some of my assumptions and also shares a few insights I hadn't considered, especially around timing delays for regulatory approvals in key international markets. For the next 3 hours, I work on making my model a lot more robust. I update the revenue build to reflect potential declines in the affected product categories, adjust gross margin assumptions, and add scenario cases for different tariff severity outcomes. Around 4:30, I meet with my PM to walk him through my updated thesis and model. He pushes back on a few assumptions, particularly around how quickly competitors might adjust their supply chains, and also asks me to stress test the downside case scenario further. He also suggests pulling historical examples from similar past tariff cycles to better frame potential market reactions. After our meeting, I draft an internal memo to outline my thesis for the short, the potential catalyst timeline based on tariffs, key risks, and various valuation scenarios. I send this to my PM at around 7 p.m. and then head home. By Wednesday, the markets are in full swing, and one of the health insurance companies I cover is reporting earnings after market close. So from 8 a.m. to 11 a.m., I spend time double checking my model and what we expect versus Wall Street consensus. And I also jot down key things I'll be listening for on the earnings call. Then from 11 to 4, I finish doing some more research into my short idea and have a one-on-one meeting with my PM in a small conference room. And this is where I feel a real sense of responsibility because if the fund ends up investing, tens of millions of dollars will be on the line. I walk him through my thesis on how the market is overlooking the impact of tariffs, and the PM grills me with questions like, what if there is a change in policy, and how confident are you in this and why? And says he'll do some more thinking and then get back to me. After that somewhat intense meeting, I take a small breather, but not for long, since it's now time for the earnings release at 4:30. The results are mixed and the stock starts to swing in after hours trading as investors react. I quickly read through the earnings press release and also jump onto the earnings conference call. And as the CEO and CFO are talking and answering questions, I pay attention not just to the figures and numbers and what they're saying, but the tone of how they're saying things. Because a lot of times what they're actually saying, and if they're confident and upbeat, or if they sound uncertain, that can be a lot more telling than what they actually say. After the call for the next hour, the team convenes to discuss our take. We compare what we heard against our thesis, and given the results are so mixed and there's so much uncertainty, we decide to trim our position. And this is because a lot of the times if trades get too complicated, we'd rather lose out on some potential gains than take a massive loss. And so proper risk control like this is super essential at a hedge fund. Next, from 6:30 to 8, I spend time updating my model with the new numbers from the earnings report and start drafting a short summary of the situation for our internal records and for the PM to potentially use in his letter to investors, and then I head home. It's now Thursday and I'm in the office again at 7:30 and I already see an email from my PM saying he's ready to move forward with the short idea I've been working on all week, but only if I can get one last expert to confirm a key assumption around the pricing impact of the tariffs. And so from 8 to 10, I prepare for the expert call, review all my notes, and refine the exact questions I need answered. Then at 10, I hop on the call with the former exec from one of the company's suppliers. He confirms that procurement teams have been instructed to cut orders for the next 2 quarters, which really strengthens our thesis significantly. And so I immediately summarize the call notes and then send them to my PM. I send a few bullets about what I learned, and then he replies, let's size it up, let's send me the final numbers. For the next 2 hours, I clean up the model, finalize the scenario outputs, and create a quick one-pager with the investment thesis, key risks, catalyst timeline, and a position sizing recommendation based on our internal risk framework. Round 1, we hold a short investment committee call, and I walk through the thesis and answer some tough questions from senior team members. By 1:45, we get the green light to initiate the short, and normally investment decisions aren't made this quickly, but given the tariff policies have created an opportunity, we need to act really fast. Between 2 and 3, our trader starts building the position, working to execute the trade without moving the market too much. I sit with him for part of it, answering any questions that come up about potential volume spikes or upcoming events. I exhale for a moment, but there's really no downtime because I still need to work on the long idea I started researching earlier in the week. So from 3 to 6, I refine the comps analysis and look for medtech companies that have less exposure to tariffs, and read through recent FDA feedback and trial updates, and narrow things down to 3 potential options and send them to my PM. Before I leave the office at 7:30, I jot down a few notes for tomorrow, mostly reminders to track real-time pricing data and supply chain metrics for the short position we just put on. Even after executing a trade, the real work of tracking it and staying ahead of the narrative has really just begun. It's now Friday morning and I'm in the office by 7:30, and the first thing I do is check pre-market activity and any overnight headlines that might affect our new short position. I also scan Twitter, news aggregators, and alternative data dashboards to see if there are any early signs of price movement or supplier disruption that support our thesis. From 8 a.m. to 9:30, I update my model with KPIs related to the short, such as import-export volume data, medtech supplier shipment trends, Google Trends activity, and even LinkedIn job postings for the company to track hiring freezes or changes. I also write a short note summarizing the first 24 hours post-position. No major movement yet, but early indicators are trending in the direction we anticipated, which is good. At 10, we have a quick team huddle where I give an update on both the short and the long ideas. The PM likes one of the long names I sent over last night and asks me to build out a model and memo over the weekend so we can be ready to move on it early next week if the setup looks right. And so from 11 to 4, I dive deeper into that long investment idea, focusing on the company's clinical pipeline, global revenue exposure, and insider buying activity. I also start drafting a rough pitch outline and identify 2 more industry experts to reach out to. I schedule 1 call for Monday and send a diligence checklist to a third-party data provider to pull some patient volume trends for their lead product. From 4 to 6, I respond to a few follow-up questions from the investment committee about the short and make some further tweaks to our model and memo, and then save it down into our internal archives before heading home. Over the weekend, I'll spend time working on the long idea, but just for a few hours on Saturday and for a good portion of Sunday. I'll usually work anywhere between 5 to 15 hours a weekend, depending on the week, and spend most of Sunday evening preparing for the stormy week ahead and get some quiet reading done without the pressures of the market. Alright, so that covers a week in the life of a hedge fund analyst. While no 2 weeks are ever the same and things can vary wildly depending on your fund strategy and your role, I hope this gives you a real sense of the intensity, pace, and responsibility that comes with working at a hedge fund. If you want to learn even more about hedge funds and how much they make, then feel free to check out the next video in the screen. With that said, thank you all so much as always for watching, and hope to catch you all in the next video.